Hey everyone, welcome back to the channel. Today we're diving deep into XRP, because this week could turn out to be one of the most important ones of the year for this asset. At the time of recording, XRP is trading around $1.43. Over the past few weeks, we've seen a sharp correction from the $2 area down into this 1.4 zone. Despite that drop, XRP is still a major player. It's sitting in the top of the market by capitalization, with billions in daily trading volume and a growing share held by institutions and ETFs. In this video, we're going to break down 4 key things. What's really going on with XRP inflation and monthly escrow unlocks, a deep technical analysis, supports, resistances, indicators, and scenarios, the latest on regulation and the Clarity Act in the US, and finally, the upcoming events around XRP and XRPL, including XRP Community Day this week. No fluff, just structure, context, and clear takeaways you can use in your own decision-making. Let's jump in. Let's start with the basics, where XRP is today. Right now, XRP is trading in the $1.4 to $1.44 range. The last 24 hours have been relatively calm, with price oscillating within a narrow band from roughly 1.42 up to 1.46. But if you zoom out a bit, the story shifts. Just a few weeks ago, in late January, XRP was trading near $1.9, $2.1, and earlier in the year, it even pushed above 2.3. So within 3 to 4 weeks, we went from a comfortable 2+ zone down into the mid ones. That's a serious correction that lined up with a broader risk-off move across the crypto market and macro uncertainty. Even so, XRP remains a heavyweight. Its market cap is sitting around $87 billion, and 24-hour trading volume is in the multi-billion range. In other words, this is not a low-liquidity altcoin that 1 or 2 whales can easily manipulate. Here you have funds, ETFs, large market makers, derivatives traders, and long-term holders all interacting at once. Now let's tackle the controversial piece, inflation and unlocks. You've probably heard the usual line. XRP has 100 billion tokens. They keep unlocking more. This thing is doomed. That sounds scary, but it misses the actual mechanics. The maximum supply of XRP is around 100 billion tokens. Today, roughly 61 billion are in circulation, while the rest are locked in escrow controlled by Ripple. Years ago, Ripple set up a strict, transparent schedule. Each month, 1 billion XRP is automatically released from escrow, regardless of market conditions. Here's the important nuance. A 1 billion unlock does not mean 1 billion tokens instantly dumped on the market. Historically, Ripple has sent 60–80% of each monthly unlock straight back into escrow. So in practice, the net increase in circulating supply tends to be around 200–400 million XRP per month. February 2026 is a good example. At the beginning of the month, 1 billion XRP were unlocked, worth around $1.6 billion at that time. Only a portion of that supply stays live in the market. The rest is relocked in escrow or used in a structured way for liquidity, institutional deals, and partnerships, rather than random market selling. Now, add the second key factor, institutional demand. Starting in late 2025 and into 2026, spot XRP ETFs began launching and accumulating XRP. Recent data shows tens of millions of dollars in weekly net inflows into these funds. That's not leveraged trading. That's long-term allocation from institutions. So when you combine those two effects, the inflation profile looks very different from the usual FUD. Yes, there is regular supply introduced via escrow. Yes, XRP is not some ultra-deflationary meme coin, but a large share of the unlocked supply is re-escrowed, and a significant part of what actually enters the market gets absorbed by ETFs and institutional investors. The result is closer to controlled, transparent inflation that funds growth and liquidity instead of uncontrolled dumping. It's not perfect, but it is structured and predictable, and markets can price that in. Next, let's talk about what's happening under the hood on derivatives markets, because that's where a lot of the short-term volatility comes from. Recent data shows that in the last day, XRP saw several $1 million in futures liquidations, with a large chunk concentrated in just a few hours. On top of that, 4-hour futures flows recorded a huge negative spike, with capital aggressively exiting leverage positions. In plain language, here's what that means. A lot of traders who were long XRP with leverage simply got flushed out. Overall leverage in the system has dropped. The market is going through a cleanup phase where weak hands and over-leveraged players are forced out. While that's painful for anyone on the wrong side of the move, structurally it's not a bad thing. When too much leverage builds up and then gets wiped out, the asset often gets a more stable base to move from going forward. Now contrast this with the spot side. While futures traders are being liquidated and closing positions, spot ETFs and long-term buyers are slowly accumulating. That's the classic pattern of an asset moving from speculative hands into more patient, long-term holders. So the current market structure looks something like this. Derivatives, in a de-risking, de-leveraging phase. Spot and ETFs, methodically building positions. That tension between short-term pain and long-term accumulation is exactly what creates the kind of environment where a strong trend can eventually emerge. Let's map this onto the chart. On the daily time frame, here's the rough path XRP has taken. Early in the year, XRP traded above $2, pushing into the 2.3, 2.4 area. From there, it began carving out a downward channel. A key swing low around 1.2 was broken, which many technicians interpret as a structure break in the prior uptrend. Right now on the daily chart we see price sitting in the 1.4, 1.45 zone, attempting to stabilize after the drop. A key medium-term support area around 1.3, which previously acted as a strong demand region and bounce point. Below that, the psychological $1 level, which would represent a much deeper correction if it's tested and lost. On the resistance side, the first major resistance is around 1.46. This has acted as a recent rejection point and lines up with important moving averages. The next region is 1.6, 1.7, where previous local highs formed before the market rolled over. Above that, you're looking back toward the 1.92 zone, which was the battleground area before the latest leg down. Indicators tell a similar story. The RSI on higher timeframes is hovering near the border of oversold territory, not at an extreme, but clearly showing seller dominance has already pushed the market down hard. The MACD remains below its signal line, indicating bearish momentum is still present, but the angle of that momentum is flattening, suggesting the sell-off might be losing steam. Putting this together, we can outline three main scenarios for the near term. Scenario 1, sideways accumulation. XRP holds between 1.3 and 1.4, 1.45, with repeated attempts to push above 1.46 failing at first. In this case, price chops sideways into the end of the week while the market digests news and waits for clearer macro and regulatory signals. Scenario 2, positive relief rally. We get a combination of better sentiment, positive headlines, and renewed demand. XRP breaks above 1.46, manages to hold that level, and then moves to test 1.6, 1.7. That kind of move would likely trigger short covering and attract sideline traders looking to catch a trend. Scenario 3, continued downside. If macro conditions worsen, Bitcoin rolls over hard, or regulatory news disappoints, XRP could break below 1.3 and drift toward the 1.1 region and potentially lower. That would represent a deeper correction where short-term holders feel real pain, but long-term investors start seeing levels that look attractive for accumulation. Which scenario plays out will depend on a mix of market psychology, macro data, Bitcoin's behavior, and upcoming news catalysts, including regulation and ecosystem events. Now let's address something you don't see on the chart: regulation. The Clarity Act is one of the big regulatory pieces in the US that could reshape the landscape for digital assets. Its goal is to clearly define which tokens are securities, which are commodities, and how responsibilities are divided between the SEC and the CFTC. For XRP, this is a huge deal. Ripple has already gone through a long legal battle with the SEC and secured an important partial win in court, but a comprehensive industry-wide framework is still missing. Right now, the situation looks like this. The Agriculture Committee in the Senate, which has ties to the CFTC and commodity oversight, has moved its part of the market structure legislation forward. The Banking Committee, which oversees financial infrastructure and stablecoins, is moving more slowly. There are internal debates around stablecoin yield, bankrolls, and consumer protections. That means the odds of the Clarity Act being fully passed in the next few weeks are low. However, the broader consensus is shifting toward eventual passage sometime during 2026, as both industry pressure and political incentives build up. For XRP and similar assets, this implies: in the short term, the market trades on headlines, committee votes, and public statements from key policymakers. In the long term, a clear regulatory framework could significantly reduce legal uncertainty and open the door to even larger institutional participation. Any progress update, positive statement, or successful committee vote can act as a catalyst for short, sharp price spikes, even before the law is fully finalized. Now let's shift to what's happening around the XRP ecosystem itself. On February 11 and 12, we have XRP Community Day 2026, a set of events and live sessions that bring together XRP holders, developers, Ripple representatives, and institutional partners. The focus is on real-world use cases for XRP in payments, the evolution of the XRP ledger, XRPL, and new features like more advanced DEX permissions and improved escrow tools aimed at institutional adoption. Later in the year, the Ripple Swell 2026 conference is scheduled, which is usually where Ripple announces major partnerships, showcases big clients, and highlights strategic directions for the network and the company. For us as market participants, the important thing is the combination of structural demand from ETFs and institutions, ongoing technical upgrades and ecosystem development on XRPL, and heightened community and media attention around events like XRP Community Day. These events don't guarantee a pump on the exact day they happen, but they do create a narrative backdrop, and markets love narratives. When you mix a strong narrative with key technical levels and a cleaned-up derivatives market, you get the kind of environment where even modest news can produce outsized moves. Let's wrap this up with a clear, balanced view. Right now, XRP sits around $1.43, well below where it started the year, but still clearly positioned as a major asset in the crypto space. Its inflation model is transparent and structured. Monthly escrow unlocks are partly offset by relocking and by steady absorption from ETFs and institutional buyers. Technically, XRP is trapped between important supports and resistances. Key supports around 1.3 and then 1, resistances at 1.46, 1.6, 1.7, and higher toward $2. Derivatives markets are flushing out excess leverage, while spot and ETFs accumulate quietly in the background. On top of that, we have a busy fundamental calendar. XRP Community Day this week, XRPL upgrades rolling out, and a longer-term regulatory narrative around the Clarity Act slowly but surely developing. How aggressively you decide to play this is entirely up to your risk tolerance and time horizon. My goal here is not to tell you what to do, but to give you a clear map. Where XRP stands today, what forces are pushing the price down, what forces are supporting it, and what events might trigger the next big move. If you like this kind of structured deep dive breakdown with update context, let me know in the comments, hit the like button, and tell me whether you want more regular XRP coverage, or if I should add 1 or 2 more top altcoins to this kind of weekly deep dive format.